Hi everyone, welcome back to another episode of FinTech Walkabout. I'm Will, where we're exploring interesting people and businesses in the world of FinTech, and of course, Happy New Year. Joined today by Jinesh Vohra, CEO, founder of Sprive. Jinesh, it'd be great just to get a quick introduction from yourself.
Yeah, sure. So like you said, I'm the founder and CEO of Sprive. My background actually is investment banking, so I used to work at Goldman Sachs for about 14 years and then decided to leave and kind of leave that corporate world behind and essentially go into the fintech space. And I run a company called Sprive. We help homeowners pay off their mortgage faster and save interest.
Okay, done that before. Yeah. A couple of those pitches. So you're at Goldman in risk prior to Sprive. What was it that triggered the shift into the world of small fintech?
Yeah, I mean, when I was at university, I always liked the idea of starting my own business, but never had the idea. Everyone around me was kind of going into banking. It was kind of the done thing. And so I kind of thought to myself, well, I'll do this for a few years and then get some experience and then probably kind of do my own thing. And then once you kind of enter that corporate world, you just kind of get engrossed and you're like really essentially focused on like progressing through the ranks. And then actually a colleague of mine grabbed me one day and was like, I'm looking to leave. I'm going to start my own business. Do you want to do something together? And I was like, okay, what's the idea? And at the time, he didn't really have an idea, but it kind of sparked this process where every day after work we'd got our laptops out, we'd kind of brainstorm business ideas. And within like a 3-4 month period, we kind of churned out quite a few ideas and then we came up with the idea for Sprive, and it was all kind of part of my own kind of personal mortgage journey.
Okay.
So this is about 10 years now. My wife and I bought our first home, and we got our mortgage offer document. It said for every £1 that we borrow, we'll be paying 50p in interest. I'm thinking, wow, that's over £150,000 in interest. And so we started like looking into how we could kind of pay it off faster and save money. And what we quickly realized is that lenders actually don't necessarily want you to become mortgage free, and it's not as easy and effortlessly as it potentially should be. And so that kind of sparked the idea, and so now we're like making it super easy for people. And it's great. The average Sprive customer right now is on track to save about £10,000 in interest and pay off their mortgage 4 years earlier, which we're really pleased about.
Fantastic. So who is it? If you had to pick a segment, who is it that you're building Sprive for? Is there like a specific individual?
Yeah, I mean, I think it's number one. It's right now. It's obviously homeowners with mortgages, residential mortgages. We support 12 of the largest lenders in the UK. So if you have a mortgage with like Barclays, Santander, NatWest, Nationwide, we support those homeowners. It's about 8 million homeowners that theoretically we can support. And then over time, we'll support more lenders. We'll support people with buy-to-let mortgages, etc., etc. In terms of the kind of people that tend to kind of use our app, are people interested in essentially personal finances, who are interested in saving money. I mean, ultimately, the core reason why people come to Sprive and download the app is either because they're interested in either paying less interest on their mortgage, or they're interested in paying it off more quickly. It's something like in the UK, 3 million people are expected to have a mortgage past the age of retirement. So imagine 3 million people in their like late 60s, 70s, still having a mortgage to worry about, and that just doesn't feel good. And so for those people, it's kind of the app is appealing, and we tend to find people who have a little bit of discretionary income. Okay. So people who are struggling to make ends meet are probably less likely to kind of use the app. But if people can afford like a few pounds a day, then that's the type of audience that at the moment we're appealing. But ultimately, my vision for Sprive is anyone with a mortgage can essentially save interest and pay it off quickly. So we're kind of finding like more and more creative ways of saying, even if you don't have any extra money, how can you still actually get benefits? And I could talk through that a little bit later.
Well, that we've talked about a little bit before, just around expanding the amount of discretionary, right? Like, how do you do that? Earn more, spend less, essentially. So, this is an open banking based podcast. So, what is it, or do you think open banking offers an opportunity to kind of help people open that gap up a little bit and start to repay, overpay
Yeah, I mean, it's probably worth just mentioning how we use open banking in our proposition, and that'll kind of provide some context. So every customer that uses Sprive essentially links their bank account via open banking. So it's pretty much part of our onboarding journey. It literally takes a couple of minutes to sign up. So you link your bank account, and then we ask you for your name, address, date of birth. And using that information, we obviously get access to the customer's spending information and also their mortgage information. And that essentially empowers the one-tap overpayments that you essentially can make to your lender and gives you all the benefits in terms of saving money and paying off your mortgage faster. And the open banking piece does a couple of things. One, it kind of helps verify the customer to kind of make sure that the customer is who they say they are. Yeah. But secondly, and most importantly, it powers the algorithm. So if you think about someone's lifestyle, every week, every month, they might spend less one day, 1 week, 1 month compared to the next. So Christmas is a great example. We're just coming out of Christmas, and a lot of people are spending a lot of money compared to like other months, right, on presents and getting everything ready for the festive period. And so in those months, people don't have less money. They might have no money to be able to put towards their mortgage. Whereas there'll be some months where actually they've done a really good job. They've spent less. They've saved more. They maybe cancelled subscriptions, etc.
Summertime energy bills are down.
Yeah, exactly. You've identified through open banking, and so that's kind of what powers our algorithm. And it makes it very, very then relevant to people's lifestyle, and it's not something abstract, or it's not something ad hoc, and it's something you can automate. And the idea with paying down debt is that the more frequently you do it, and the smarter you are around it, the more money you save.
Okay. So, I mean, there's a lot of moving parts in that, right? And for someone of my demographic, I think the challenge of getting a mortgage is an increasingly difficult one. So can you talk to us a little bit about the trends, like what's happening today from an innovation perspective, what's happening in the world of mortgages specifically? You talked a little bit when we were chatting earlier about the intersection of mortgages and pensions and how they parallel. So yeah, because that's candidly not a world that I'm yet to experience. Let's put it that way.
Yeah, sure. So let me, and I'll try to like bring in open banking into that kind of response as well. I mean, if you take a step back, there's 11 million homeowners with mortgages in the UK. And then you've got a smaller population of people obviously trying to get onto the every year, like actually buy their first home, and then you've got a whole swathe of people trying to get onto the property ladder. Mm-hmm. And it is tough. Property prices are increasing. Like for example, in the last 10 years, property prices in some areas have doubled, but people's salaries are not increasing nowhere near that rate. And then we've had macro challenges with things like the pandemic, and then the cost of living crisis. And so there are like a bunch of like innovators trying to help people save enough for that deposit so that they can kind of get onto the property ladder. There's companies who are trying to create a pathway so that as you're paying rents, that creates a journey towards home ownership. There's people who are offering like innovative lending products where maybe your parents can help if they're in a fortunate position to be able to essentially help you with the deposit. It could be, there's things like shared ownership where a bunch of people can get together and try to get onto the property ladder. And so we're definitely seeing from helping people save and helping people kind of lend to like first time buyers is a lot of innovation happening. And I think also open banking just gives a lot more transparency in terms of people's affordability. Sure. And so that kind of helps in terms of the underwriting process.
Do you think that could go too far and give almost too much transparency from a consumer perspective to say, well, actually there are things that maybe I don't want my lender to know? I think that, we've seen that in the credit space already with, won't name them, but some credit scoring providers saying, actually, if we see you've missed X number of payments, we'll actually, cut the open banking connection and, allow you to tell us as opposed to...
I think at the moment open banking in the mortgage space is in its infancy, but I think it's all about value exchange. So if people really want, generally culturally in the UK, people want to get on the property ladder. before that, obviously, you're renting and you're essentially paying someone else's mortgage, and,
Yeah.
and you're hoping them
Lucky me.
become richer, right? So, I think if you ask the average person, they would love to kind of have their own home and get that mortgage and start that journey. And so, if that meant that they couldn't get a mortgage via traditional means, and that the way they could get a mortgage means that they have to link their bank account, I think a lot of people would personally do it because they don't have the option. And I think it's all about explaining why it's going to help them, and sometimes people are nervous about open banking. I mean, I think the last statistics I saw 4 million people now have kind of used open banking in some form or shape. So every year I think it's getting
on the up and up. Though,
it's going up and up, right? And I think it's a little bit like if you think about like debit cards and things like that and using that online. Initially, people are like, well, why would I do that? Now people on Amazon are doing it all the time, and it's not even something you think about. So I think it's a learning curve, and then you've got like people with existing mortgages, and how can you service that better? And if you think about the landscape right now, as interest rates are rising, right? If you think about we're in an inflationary environment, and so the Bank of England has had to respond by increasing interest rates very, very aggressively.
Yep.
And so what does that mean for people who have mortgages? It means that when they come out of the deal periods, they're going to get a bit of a nasty shock in terms of increasing monthly payments, but also the cost of their mortgage over the lifetime suddenly increases massively. So I gave you that example for like my mortgage, and I got it 10 years ago when interest rates were like very, very low, and it was for every pound that I'd borrow, we paid 50p in interest. So it was something like £150,000 because we just borrowed over £300,000. But now, if I was looking to switch, that'd be more like £450,000. I think it's crazy how much interest people will be paying. And so that's where Sprive comes in. It's like, well, can you afford a few pounds a day, or is there innovative ways like Shop with Sprive, where you do your regular shopping? We partner with cool brands like Morrison's, Asda, Sainsbury's, Waitrose, etc., etc. And every time you do your weekly shop, you get extra money that helps you pay off your mortgage faster. And is there other creative ways we can do just by you doing what you normally do that would help you essentially save money? So we're very much focused on that space, and there isn't that much innovation in terms of like helping people in the remortgages space that I'm seeing, partly because the lenders, the big lenders, essentially control the market. And then the other thing I'm seeing around open banking and kind of mortgages is in the lending space and in the underwriting kind of space, in that ultimately at the moment to get a mortgage it can take like 2 months. And that's painful, and the amount of paperwork you've got to complete, etc., etc. And if you think about what a lender's interested in, they're interested in affordability, eligibility. Can you repay this debt that you're taking on? Yeah. And open banking data gives you a lot of insights on someone's ability to kind of pay back. Like if you see someone with lots of gambling transactions, maybe a lender's going to be a little bit nervous and say, actually that person's probably someone who maybe we don't want to lend to. Also, like you can see maybe through their open banking spending that they might be spending a lot on childcare. And if you look at your income, then you look at your childcare costs plus what your cost of living, energy, and all of that stuff. Can you afford the amount that you're looking to borrow, etc.? So it's really, really powerful.
Context, isn't it?
Exactly. But imagine a situation where very quickly you link your bank account and you get an instant decision on whether you can get a mortgage or not. And then literally within a couple of hours, it's like you've got this mortgage and you switch. I mean, how amazing would that be? At the moment, Habita is a good example. They're a mortgage kind of FinTech, and their whole branding is mortgages is hell. And the reason being is because the amount of paperwork you've got to complete is crazy. And one of the things that we're doing with open banking and Sprive is making that journey so much more slicker than what exists in the market today. So not only do we help people pay off their mortgage faster and save money there, but we also scan the market every day for better mortgage deals. And then if we can find our customers a better mortgage deal, we'll help them get that mortgage deal. And because we have the open banking data, it's so much slicker and easier than any other journey in the market.
Yeah, I mean that proliferates out, right? That's what we're up to, isn't it?
Exactly.
Just the shameless self-plug for AppTech while we're here. Just to talk through, it's happening very, obviously with what you're doing, but it's happening. It's very real at the moment in the mortgage space. These are the types of things we can be doing across everything. Yeah. Everything I use. So I guess it's then a question of like, what is it the customer needs to know? So I generally ask this question at the end, and I've tried to ask every guest that we've ever had on. Do you think it matters whether or not a customer knows what open banking is? So that's part one, and then part two, if not, what do they need to know? Because the term open banking, open banking, you've always been told don't share your bank details, don't tell other people your credit card information or your account information. But that narrative is shifting to trusted individuals like ourselves, obviously, or trusted entities who can help you out and kind of build out that autopilot, we call it. You set the parameters, consumer, and we'll fly the plane for you.
Yeah, I mean, I think if I'm honest, that open banking and the terminology is probably it's not very clear what that means, and it's quite technical. So I think it doesn't really matter that you communicate so much that this is open banking. I think it's more focused on the value exchange and understanding what you're by doing and providing the necessary consent, what are they going to get in exchange. And I think if you can articulate that, then you've got a better chance of actually getting people to essentially share that level of information. I also think that there are pioneers, and there are people that who came into the market when open banking first started, right? Because it's probably, how many years has it been now? Three years, maybe?
Almost
4?
five.
Was it almost 5?
Yeah, so this is a question I ask most of our guests, usually towards the end of it, and I've generally gotten the same answer every single time. But it's a question of, do you really think it matters whether or not people know what open banking actually is? It's a pretty complex term for most people, and I think especially in the UK, or at least Western world, you've been ingrained not to share banking information, your account number, your sort code. So the term open banking, is it doing it justice, I suppose?
I think open banking as a term is quite technical, and I think if you talk about open banking to a user, I think most times you get like this vacant look on their faces. So I think it's really need to focus on the value exchange. Obviously, securities and people's personal finances, they're obviously very conscious that they don't want to be kind of opening themselves up to fraud. And I don't think the general kind of open banking initiative have done a great job at like educating users about the what this is. And so I think it takes each individual kind of solution to be able to explain why they need access and what is the value add. And if that exchange essentially makes sense, then customers will essentially be willing to kind of share their data. And obviously open banking's been around for around 5 years now, and there have been early kind of solutions. You look at the likes of like Plum and Moneybox and Chip as an example, where they've almost been kind of pioneers in explaining to people why it makes sense for you to share the data and what value you can add. And over time, you get more and more people getting comfortable with open banking. I think the last numbers I saw is that maybe 4 million people are now have used open banking in some form or shape, and there's almost an element of people referring friends and family. So if they're getting value out of a product, then they're kind of telling others about it, and because it comes from someone that they trust, they're more likely to then kind of link their bank account and use that and use the solutions that are out there.
Yeah, and that's I think the evolution of it maybe isn't exactly clear as to where that goes, right? So Sprive is one of 17 fintechs to sign the letter to the FCA to provide more clarity around the future of open banking. What kind of transparency, like what are you looking for when we go back to the regulator and say, hey, what's the conversation that needs to be had?
Yeah, I mean, I think it's important, and it's great that the fintech community is kind of getting together and talking with one voice to the regulator. Ultimately, what insurance is that as the implementation regime kind of comes to an end, that there's pressure on basically the FCA keeping focused, but also the banks that are kind of a key part of maintaining that open banking infrastructure are investing, because it's only as good as the whole infrastructure and the whole solution working. And if there's no one there to kind of govern the whole regime, then it can kind of just fall apart. And there are businesses and customers that are getting true value out of the whole infrastructure, and I think the UK has been one of the pioneers to kind of like show the world what can be done when the regulators kind of help both the customer, but also help foster innovation, and to kind of do such a great job at least kicking off, but then not supporting it for the long term is not a great situation to be in. And so as an owner of a business that uses open banking and it being quite pivotal to our solution, you need to know that open banking is going to be around and it's going to be supported and invested in for the next 5, 10, 15, 20 years.
Yeah, and it's not just open banking, right? I think we kind of plug the open everything play. We're now seeing open finance, which is where the worlds of mortgages and pensions starts to come into play a little bit more. So where do you see it? Where do you see it going over the next few years? Because as you said, it still feels like we're in its kind of nascent stage. You alluded before to the uptake of credit cards and debit that took a couple of decades. Credit scores are unbelievably only kind of 30 odd years old, and have really now taken hold. Do you think we'll see the same things with open banking? Where do you see open banking evolving into?
Yeah, I mean, I think one of the challenges open banking has had is the consumer experience journey that ultimately people experience. There's quite a lot of friction. Like if you're as a customer providing consent, you have to re-authenticate every 90 days.
Yeah.
Direct debit, for example, it's automatic. You can move money out of your bank account and make payments. So I would love to see, for example, the users have the option of indefinite consent, or if they want to then provide consent every 3 months, that being an option. So I think things like that fundamentally need to be improved to increase the adoption rate and create and the friction that we have now is putting certain people off. In terms of like open finance, I think that's going to be really powerful in terms of helping people. The more that they can see their entirety in terms of their finances all in one place means that they can make better financial decisions, but also creates more innovation in the market, because you'd be surprised what kind of solutions people will come up with when they're given the right tools. And the whole spirit of open banking was just that, not just the X number of banks out there in the market having all that data and not necessarily kind of giving power back to the user. So I think that I'm quite excited about the potential for open banking, but also I've been a little bit frustrated in terms of I don't think open banking has been as impactful as it could have been, and there are a lot of businesses that have unfortunately gone by who've not succeeded because of things like the 90-day authentication. To acquire a customer, and it's expensive because you're trying to build trust, get them to essentially manage what's one of the most important things in someone's life, their money, and then you convince them to do that. You use a product, and then say, for example, the re-authentication, they might do it once, they might do it twice, and then suddenly they get frustrated and they stop doing it. And if you don't retain the customer, then you can't monetize the customer over the long run, and then it's really difficult to build businesses. And so some businesses that would have, if the journey was a little bit more well thought out, might still be around and actually flourishing, when actually they've gone and actually no longer exist or are in the market. So I think that's one thing that I'd love to see change.
Do you think that, from a very capitalistic perspective, do you think that kind of lays a threshold or a barrier that almost means that we're going to see better businesses, more valuable to consumer, because it is difficult to both engage with and retain those customers? Is there like a bar there that's then set because there is this 90-day re-authentication process that your proposition has to be so good that a customer is willing to do that?
I think there's two parts. I think there's the one is that the value exchange needs to be really strong. So for our proposition, you can literally save £10,000 in interest is the average customer what they're saving. And so when you look at that value exchange and you see those numbers, and very early in the journey you can see how much money you can save with Sprive. There's that motivation, and then if you show them the right screens and you the right engagement, you can keep. We've got a really strong re-authentication rate, but we've also built the product so that it's not like essential. That you need the open banking data to be able to power it adds value, but you almost have to reshape the product so that it's not just all or nothing, so that your product essentially dies and adds no value to the customer if that customer decides not to re-authenticate. I think you just got to be very creative.
Supplementary, I suppose.
Supplementary rather than essential, I think,
Yeah.
is kind of the most important thing.
That's how our business has shifted for sure. We started out with this, like, open banking is going to be the next new big thing, and hey, it still might be, but we can't, I don't think, from a business perspective, we can truly rely on it being the core fundamental thing. It can be a theme within our business that helps, extrapolate new data, drive new value for ourselves and our customers. But yeah, it's far from being, I think, the core thing that we can kind of fall back to.
Yeah. As an example, 30% of our customers link their bank account when they download the app. So that's 70% of customers that might, if we could find another way of onboarding them, might find value from our product. So over time, we might look at that. Right now, we're going down the open banking route in terms of getting them in. And then from then on, the product's quite flexible in that if you keep re-authenticating, you get more value. But if not, you can still use the product.
Yeah. Okay. Yeah, we've looked at some of the things. I think it's just that value up front. This is what you're going to get. Kind of showcase that, hook them on and reel them, right? So far, if you had to say one of two words, success or failure, open banking, what do you think?
I would say a success only because it has brought companies like myself and yours to the market.
Yeah.
And those companies wouldn't have existed if open banking hadn't ever kind of got off the ground. And I think it's changed the way globally different markets are like starting to think about how they think about their kind of interaction between customers, the banks, and the regulators. So from that perspective, I think it's, I have to say it's been a success because you have to do these things to create innovation, and it has. Has it been as successful as it could have been? Nowhere near. Like, it's literally like.
But hey, we're the pioneers. Right?
Yeah, we're the pioneers, and obviously, I think the important thing is that the regulator keeps pushing and supporting this initiative that it started, and also brings about change quickly. I think it's sometimes some of the innovation I've seen is slow down. VRP is something that again has come about.
It's taken.
Again, it's so slow, and also again the consumer journey. There's a lot of friction there, and so it's like. For Sprive, our business, it's like, do we want them to consent to data, and then we're going to consent them to VRP, and it all becomes quite clunky.
Yeah.
And so I think more needs to be done. I think more needs to be done when they're building solutions to think about actual customers and make sure customers are being solicited, as well as fintechs and other people.
Have to start with the customer, don't we?
Yeah.
I think that's always been the core of our proposition. We're obviously we toe the line between B2B and B2C. Call us B2B2C if you want. And yeah, I think fundamentally, we always get asked this by investors: is who are you catering to? And at the end of the day, if the customer is not first and foremost, then what's the point? So great stuff, Jinesh. It's been an absolute pleasure having you as the first guest in our new setup. Very quickly, kind of where can people find you? Anything you want to plug? What comes next for Sprive?
Sure. Yeah. No, I mean, first of all, thanks for having me, Will. In terms of if you want to connect on LinkedIn, I post quite regularly there. So
really?
So just feel free, Jinesh Vohra, and I'm happy to kind of accept the connection. I'm always looking to network with people in the ecosystem. If you have a mortgage and you're interested in saving money or paying it off quickly, then head to the App Store. It's a free app, Android, iOS. Type in Sprive, you'll see it there.
Brilliant. Well, Jinesh, thanks so much. And everyone else, thank you so much for tuning in, and we'll see you next time on FinTech Walkabout. Excellent. Got there in the end.
Cool.